The Institute of Capital Market Registrars says an effective utilization of Nigeria's capital market can help the nation to regain its economic momentum. President and Chairman of Council of the Institute, Owoturo, said the present economic realities calls for effective utilization of the capital market for enhanced growth and development. Owoturo said the inherent opportunities in the capital market can help the nation to regain its economic momentum. Okay, we have Owoturo, who is the president and chairman of the Capital Market Registrars, joins us from our Lagos studios. Very warm evening to you from Lagos and from Abuja here. Tell us, you just said that a rejig of the capital market can create that momentum that will lead to an acceleration of Nigeria's economic development. Shed more light on that, please.
Thank you, Chris. Thank you for having me. I mean, this is something that has been tested, tried and tested. If you look at the 2004, thereabout 2005 banking recapitalization, there was a lot of activity in the capital market. I mean, virtually all the banks came to the market to raise money to meet the minimum capital requirement at the time. And those years were probably the best years, some of the best years of a capital market, because there was a whole lot of activity. And today, the strong big banks we have today are as a result of that event, singular event. So good enough, there's a new minimum capital requirement for banks. Virtually all the banks are going to be coming to the market to raise capital. But what we're proposing rather is that rather than just the private sector looking to the capital market to raise what you call patient capital, because the only place you can get patient capital really is the capital market. Patient capital is that capital that gives you money and then waits for returns. When you go to the bank to borrow money, the bank start asking you to pay back almost immediately with interest. When you come to the capital market, it's patient capital, where the companies or the investment is yielding results, is when the investors begin to cash out. So really, that is where real development happens, if you're looking to see real development. Thank you, Chris.
What you may want to call much of public offers. What is the problem? Is it because of a depressed economy? That's why we're not seeing this and is affecting the capital market?
It's a huge part of a challenge. I won't call it problem, challenge, where you have a situation where there's uncertainty. Businesses, therefore, they delay their decision making. One very significant decision making a company can take, or an institution, an entity can take, is a decision to raise additional capital. Where there's uncertainty, those decisions tend to be delayed, and then we're watching and trying to see where the economy is going. But good enough, we will see some activity, because what the banks, for example, theirs is regulator induced. But rather than waiting for the regulator to induce these activities, we are saying that if we create the right environment, we can then begin to see companies. It makes it then easier for entities to take that decision to come to the market. Because, I mean, it's been all over the world. It's a known fact that listed companies are more transparent than unlisted companies, because they have certain guidelines that they have to keep to. They have certain reporting guidelines, certain governance guidelines that they have to keep to. And therefore, because they are more transparent, they pay more tax. So when you see more companies coming to list, then you will see the result in terms of tax revenue for the government. Thank you.
Yeah, but would you say that the depressed economy is affecting, companies from coming to the capital market? Because you just mentioned the banks that the governor of the central bank recently said they are going to recapitalize them. What's the situation with the capital markets and those who come to borrow funds from it?
Well, we will say, that there are two ways you can raise money in the capital market. One is through debt instruments, so bonds and some other debt instruments. Then the other is through equities. All right. Depending on the capital structure that an entity is looking to operate with, there are optimal, what you call the optimal capital mix. That is why a company, for example, would decide to come for either a debt instrument or equity. The pricing also matters. Interest rates affect bond prices, all right, and interest in bonds. Interest rates affect interest also in equities. So these things have a way of affecting themselves. But more particular to your question about the banks, the CBN is of course, that with the Naira depreciation and the value of the Naira, so technically, Nigerian banks are technically weaker in terms of when you convert their total assets to dollar, for example. I suppose that's part of why the central bank is asking for increase in minimum capital. When you also look at their exposures, all right, the exposure to foreign denominated assets, when you put all that together, you see that for them to meet their regulatory the acceptable levels of regulatory capital, they have to show up minimum capital, which is why I guess the CBN is coming out with that.
All right, Oluseyi, let us look at the situation of unclaimed dividends and abandoned shares. How can it be reduced, and can they ever be claimed again?
Well, the law is clear, although some people don't, it's not well known, but the law is quite clear. Every investor has opportunity to claim their shares in perpetuity. So you can't lose your shares. So let that be clear. Even if it's 50 years, you can come back and claim your shares. What the law, where the law changes is about dividend. So after 12 years, previously, the Companies and Allied Matters Act said that money goes back to the company that declared it. So for example, if we take Bank A or Company Y, has a registrar, and then the registrar has unclaimed dividend. After 15 months, whatever is not paid is returned to the company, all right? And the registrar keeps 10% of that. After 12 years, the registrar returns the entire dividend, whatever is left of that 10% returns to the company, and the investor can no longer claim. But that law is changed, all right? CAMA has a new provision, but you have a space of 12 years within which you can claim your dividend, but you can never lose your shares. Now, to your first question as to what is happening to unclaimed dividend? Now, unclaimed dividend, the problem of unclaimed dividend is really a problem of data and a problem of identity management. If you look at a company, I'm going to mention names like MTN, for example. In the last 3 years, probably MTN has paid probably 750 billion, all right, in dividends. But when you look at the unclaimed dividend of MTN, all right, it is not as high as the unclaimed dividend of your average listed bank that pays maybe 20 billion in dividend every year. The question is why? And the answer is that MTN is a newly listed company and has the register of MTN has complete data, meaning that the registrar has enough information to pay dividend. But if you take your average listed bank, say a First Bank, for example, that has over 1 million shareholders, if the oldest bank in Nigeria, all right? I would imagine that First Bank's register has less than 50% of the accounts mandated. And that is not surprising because many of the people on the First Bank register became shareholders 20, 30, 40 years ago, all right? Meanwhile, you have an MTN newly listed. When First Bank listed, information and data management was not as sophisticated as we have it today. So really the problem of unclaimed dividend, like I said earlier, is a problem of data and it's a problem of identity management.
Management and data. But let's ask you again, what are the challenges facing the registrars and the possible solution quickly?
Okay, like every other business in Nigeria, we face the same problem, the same challenges. Uncertainty, the changing value of the Naira. Our business is really very much dependent on technology. You can't run a registrar business without technology. Some of the software, a whole lot of the software we use are dollar-based. They are dollar-based. So as the value of the Naira depreciates against the dollar, the cost of doing business is going up, but you still have to service your clients. So the challenge really, like everybody, like the manufacturers are facing. Personally, I give you an example. Up until last year, my personal Microsoft account cost me just 38,000 per annum, all right? This year, when I was renewing it, it cost me 170,000 Naira. So you can see the jump. Now imagine a business that has 50 employees, each employee having a Microsoft account and how much they have to pay for their email service. So you are seeing all of these sharp increases in the cost of doing business. Diesel, our data centers are on, all right? We're using data centers that are on 24/7. So you can imagine the cost of running. So it's the same challenges really that everybody is facing. I'm sure Arise TV is facing the same challenge like we are facing. And then the other thing though is that we don't have a charter yet.
Okay, but let me just quickly.
We're pursuing our charter.
All right, Sheyi, let me ask you finally. We see how in other climes the capital markets contribute to the economic development of the country. Is Nigeria's case different? And on the contribution of this sector to the nation's GDP, what percentage are we talking about, the capital market?
As of last year, if my information serves me right, you'll be talking about a little under 20%. All right, a little under 20%, if my memory serves me right. That gives you, but the Nigerian capital market can do a lot more. So you take a South Africa, for example, the total capitalization of the Johannesburg Stock Exchange, all right, is probably about 300% thereabout of the GDP of the country. In our own, it is much lower, all right? So that gives you an idea of the scale to which the capital market can contribute. But we're not seeing that because of some of the challenges of infrastructure, power, roads. If we were to open up the roads, have power, and a whole lot of other infrastructure, you would see the capital market, and all of these things can actually be financed through the capital market. That's the interesting thing. So we need government to pay more attention, and rather than a whole lot of some of government expenditure, all right, can be through the capital market, so that it is PPP, public-private partnership, and then these funds are funneled through the capital market. Then you begin to see the kind of impact that we really desire.
All right.
Thank you.
Thank you so very much. Owoturo is the president and chairman of Council Institute of Capital Market Registrars. Thanks for coming to News 9.